Hey, what's going on, guys? Sterling the Investor here. And in today's video, we're going to break down the stock AT&T. We're going to jump into this one. It's, very widely known as a great dividend stock. However, I'll give you my breakdown on it, whether or not I hold this stock, and then why or why not. So let's jump into it. AT&T. So first off, I'll start by saying that this is a good stock. I don't think it's a bad stock or a horrible stock by any means. So let's jump into just some basic facts regarding this company. So ticker symbol is just T. So if you go to Robinhood or E-Trade or Yahoo Finance or anything like that, and you type in T for the ticker symbol, AT&T should come up. It currently trades around $28 right now, and it does pay out a dividend at roughly 7%, which is huge. Most stocks that are considered good dividend stocks pay out around 2.5, 3, 4% at the most. The fact that AT&T pays out a 7% dividend is huge. It is a part of the S&P 500, and I believe it may be a part of the Dow Jones Industrial 30. I'm not quite sure on that, but I know it's a part of the S&P 500. And current market cap right now about 206 billion. Industry and sector is telecom. Everybody pretty much knows that AT&T is one of the household names in that sector. And then in terms of my 1 year outlook on this stock, I would have to say that it's probably just going to mirror the S&P 500. As the overall stock market goes up and down, I can see this stock pretty much staying on par with that. 5 year outlook, I think overall up. I think there's no way in 5 years that this stock is worth less than it is now. You know, with that said, I wouldn't consider this as, technically a growth stock. Like I don't see, a double or triple or quadruple. But, it's trading around $28 now. In 5 years, I could see it being around 35, maybe even $38. So I wouldn't consider it, crazy growth, but I do see it going up. And then let's jump back to the dividend. The dividend is around 7%. You know, they have continuously increased that dividend for the last 34 years. So, that's pretty impressive. The fact that that dividend has continuously gone up and up and up. Right now, it pays out, about $2 per share annually. And they pay it out quarterly, so you're receiving about 50 cents per share annually. So do I hold this stock? I currently don't hold this stock in my portfolio. And the reason why is because the company that holds this space in my portfolio right now is Verizon. And I just believe in Verizon a little bit more than I believe in this stock and this company. Just because the leadership team, the dominance, the quality of service, the quality of product that they've always put out has always spoken to me as a consumer. So I've always seen them superior in that light. And then their stock price is around that $50, often goes above that $50 range, which tells me that Wall Street is behind, that stock. And, they have a dividend as well. It's not quite as high as AT&T's. But this video is about AT&T. We'll get into Verizon another time. In fact, I have a video on Verizon, so you guys check that out. So the fact that would I add it to my portfolio? I would. I mean, I think it's a good stock. But as I mentioned earlier, I like Verizon better. If there's ever an opportunity or need for me to add another telecom stock to my portfolio, I will add AT&T. In particular for that 7% dividend. As you guys know, I'm pretty big on dividends, so I would hold this company in my portfolio. So if we look at the current chart right now, 1 month, of course, we're down. It's mirroring the market. Year to date, it's down. You know, pretty significantly. I mean, it's pretty on par with the rest of the market, and that's why my 1 year outlook. I don't see this stock doing anything crazy in terms of you know going away from what the overall market is doing. I think it's going to stay pretty on par with that. So in addition to me just liking Verizon better than AT&T, here's a couple of other reasons and a couple of things that you may want to research before investing in AT&T. AT&T has a lot of debt. They have a huge debt load. However, the debt load, to me, based on my analysis and based on my opinion, I think is manageable. I think they've got good terms, good interest rates on the debt, and I think their current cash flows should be sufficient to continue to pay on that debt and not let them get into any financial trouble. However, the fact that we are starting to see signs of a bear market, you may want to stay away from companies that have a huge debt load, because if for some reason they can't generate the same revenues and have that same cash flow coming in, it could become difficult to make payments on that debt. I don't think that'll be the case with AT&T, but if it's a stock that you're considering, it's always something to consider. So, guys, with that in mind, I hope this analysis, I hope this research help you guys understand AT&T as a stock. I'm pretty sure you guys all know AT&T as a company and you know what they do. That's why I didn't spend too much time on there. But I hope you have an understanding of them as a business now. And if you are considering investing, I hope this helps. So I'll catch you guys in the next video.